Grayscale's Ethereum Trust, or ETH, is a significant player in the digital asset market. It provides investors with exposure to Ethereum without directly holding the cryptocurrency. ETH holds Ethereum in trust, with shares representing ownership of a portion of this underlying asset. A key aspect of ETH is the concept of a discount or premium to its net asset value, or NAV. NAV represents the total market value of the trust's assets minus its liabilities, divided by the number of outstanding shares. Historically, ETH has often traded at a significant discount to its NAV. This discrepancy can be attributed to several factors, including the trust's structure, fees, and market sentiment towards Ethereum. Understanding ETH's role and the dynamics of its discount is crucial for investors. The recent narrowing of ETH's discount has captivated crypto enthusiasts and institutional investors. This shift is attributed to rising expectations of a potential approval of a spot Ethereum Exchange Traded Fund, or ETF, in the US. A spot ETF would offer a more accessible and regulated way to gain exposure to Ethereum. Unlike ETH, an ETF would be listed on traditional stock exchanges, attracting new investors and driving up demand for Ethereum. The SEC's approval of a Bitcoin futures ETF in late 2021 has fueled optimism for a spot Ethereum ETF. The shrinking discount of ETH indicates rising expectations of an ETF approval. Investors are pricing in the possibility which could result in increased competition for ETH and potentially diminished demand for the trust structure. While the narrowing discount of ETH has generated excitement, market experts caution against unbridled optimism. Analysts warn of potential outflows from ETH if a spot Ethereum ETF gains approval, leading to increased market volatility. A spot ETF's ease of trading and lower expense ratios could entice investors to switch from the trust to the ETF. This migration could trigger a sell-off in ETH shares, amplifying the discount and introducing volatility into the Ethereum market. Traders might capitalize on price discrepancies between ETH and the spot Ethereum ETF, creating short-term market fluctuations. The SEC's decision on a spot Ethereum ETF remains uncertain, adding another layer of complexity to the equation. The SEC's evolving stance on crypto ETFs, particularly spot Ethereum ETFs, will likely have profound implications for the market. Historically, the SEC has expressed reservations about approving spot Bitcoin or Ethereum ETFs due to concerns about market manipulation and fraud. However, recent developments suggest a potential shift in the SEC's approach. The approval of a Bitcoin futures ETF indicates a growing acceptance of crypto-related investment vehicles within a regulated framework. This move has fueled optimism that the SEC might approve a spot Ethereum ETF in the future. Factors influencing the SEC's decision include the maturation of the cryptocurrency market and the implementation of robust surveillance mechanisms. As the crypto industry evolves and addresses these concerns, the SEC's stance on spot Ethereum ETFs might shift further. The potential approval of a spot Ethereum ETF could be a catalyst for significant change in the market. The potential approval of a spot Ethereum ETF presents both opportunities and challenges for investors. For investors holding ETH, the ETF approval could introduce a period of price volatility. The possibility of outflows from ETH to the more liquid and cost-effective ETF might impact the trust's price and discount dynamics. On the other hand, the ETF approval could provide a more accessible and regulated way to gain exposure to Ethereum. The key takeaway for investors is the importance of staying informed about the evolving regulatory landscape and conducting thorough due diligence. The crypto market remains inherently volatile, and the potential impact of an ETF approval is still subject to considerable uncertainty. The potential approval of a spot Ethereum ETF holds significant implications for the broader cryptocurrency market. It could signal a new era of maturity and mainstream adoption for digital assets. An ETF approval would represent a major step towards legitimizing cryptocurrencies in the eyes of institutional investors and regulators. The availability of a regulated investment vehicle could encourage greater institutional participation, unlocking substantial capital inflows into the crypto market. The introduction of a spot Ethereum ETF could pave the way for similar products tracking other cryptocurrencies. This expansion of regulated investment options could accelerate the integration of digital assets into traditional financial markets. However, the regulatory landscape remains complex, and the SEC's concerns about market manipulation and investor protection must be addressed. The potential approval of a spot Ethereum ETF represents a pivotal moment for the crypto market, requiring ongoing collaboration between industry stakeholders, regulators, and investors. Like, subscribe, and comment. Thanks for watching, and see you next time.